Aussies, imagine this. You're healthy today, working hard, paying bills, looking after the fam, then banging one accident, one illness, and suddenly your income stops overnight. But your rent doesn't stop. Groceries don't stop. Kids' school fees don't stop. Your life keeps moving, but your money doesn't. And here's the real shock. In 2026, income protection rules have changed again. Premiums are up, waiting periods are trickier, and thousands of Aussies are unknowingly buying policies that won't even pay them when they need it most. Before you lose $1 or worse, your entire safety net. Let me break down exactly what every Aussie must know about income protection in 2026. Hey legends, welcome back to the Cash Kazier No Fluff Aussie breakdown of insurance, money traps, and all the stuff the industry doesn't explain properly. Today, I'm ripping open a topic that affects millions of Aussies, especially those relying on a single income or supporting a family income protection insurance. 2026 has brought new rules, higher premiums, and a lot of fine print that most people either misunderstand or completely skip. So if you're thinking about getting income protection, already have a policy, or you just want to stop wasting money, this video is for you. Let's dive right in. Income protection sounds boring. Until you actually need it, it's basically a backup plan. If you can't work due to sickness or injury, it pays you a percentage of your income so you can still survive, pay bills, and keep your lifestyle stable. In 2026, with cost of living insane, interest rates biting, and job security shaky, losing your income for even 1 month can destroy your savings. This is why income protection has become one of the most important policies an Aussie can have, but also one of the most misunderstood. Most Aussies don't know this, but the entire structure of income protection changed over the last few years. Insurance companies were losing billions, so they tightened everything. Now in 2026, benefit periods are shorter, waiting periods are stricter. Proof of inability to work is harder, definitions have changed, making claims trickier. The result, people think they're covered, but when they try to claim, the insurance company says, nope, you don't meet the new criteria. The biggest mistake is buying income protection based only on price. Cheaper policies look good, but they give you lower payouts, extremely long waiting periods, conditions where you must be almost fully disabled before they pay, exclusions that make half the policy useless. Income protection isn't like car insurance. You're not protecting a car, you're protecting your entire future income, often hundreds of thousands of dollars. One wrong choice, and you'll be paying for a policy that will never pay you back. Aussies used to love agreed value because it guaranteed a fixed payout, but that's gone now. In 2026, almost all new policies use indemnity, meaning your payout depends on your income at claim time. So if your income drops in the future, your payout also drops. Self-employed Aussies, casual workers, and contractors get hit the hardest. This is why income documentation is now a critical part of buying a policy, and most Aussies don't even know it. Want to know why one policy is $38 a month and another is $89? Waiting periods. A 30-day waiting period costs more, but a 90 or 180-day waiting period makes the premium dirt cheap. But think about it. Can you survive 3 to 6 months without income? Most Aussies can't. Most families can't. This is where people accidentally destroy their own coverage. Cheap policy, long waiting period, and when they get sick, it pays nothing until it's way too late. Old policies offered payouts until age 65. Not anymore. Now most new policies in 2026 offer 2-year benefit, 5-year benefit rarely. To age 60, insurance companies realized long-term payouts were too expensive, so shorter benefit periods are now the standard. And this is where Aussies unintentionally buy a policy that ends way too early. Imagine getting seriously ill and your income only lasts 2 years. Everything after that, you're on your own. Your job affects everything from premium price to how much they'll pay you. But here's the catch. Many Aussies select the wrong occupation category, or the agent selects one that's cheaper, but with worse benefits. If the occupation is wrong, your claim can be delayed, or even denied. This is one of the biggest hidden traps no one talks about. Income protection isn't only for total disability. It should also protect you if you can work part-time due to illness or injury. But many 2026 policies only pay during total disability. Partial disability support is either weak or missing entirely. This means if you're only able to work 10 to 15 hours a week, your policy might pay nothing. Always check this feature. It's becoming more important every year. Let's be real, income protection has become expensive, especially for tradies, self-employed people, over 40 Aussies, office workers with stress-related risks. But the biggest mistake people make is choosing a cheap policy that covers nothing. Focus on value, not price. You're protecting your paycheck, the biggest financial asset you have. Let me make this simple. If losing your paycheck would ruin your household, you need income protection. This includes sole breadwinners, renters, mortgage holders, contractors and gig workers, families with kids, anyone without huge savings. If you can't live 6 to 12 months without income, this insurance isn't optional, it's essential. When comparing policies, check these 5 things first. Waiting period. Benefit period. Your occupation category, partial disability definition, income documentation requirements. If these 5 things are solid, you're already ahead of 80% of Aussies buying insurance blind. Insurance companies know that most Aussies never review their policy again, but in 2026, premiums can jump massively each year. So review your policy annually to make sure benefits haven't dropped, premiums haven't spiked. You're still covered based on your current job and income. If you're not reviewing, you're overpaying. Income protection isn't about fear, it's about stability. It's about knowing that if life hits you hard, your future, your family, and your income are still protected. But the 2026 rules are more complex than ever, and that's why Aussies must understand the fine print before they sign anything. So if you want a full comparison video, or if you want me to break down the cheapest but safest income protection options for Aussies, drop a comment below and I'll make it next. And if you found this helpful, make sure you subscribe. We've got a lot more Aussie financial truth coming your way. Stay tuned, legends.